So today we're providing a portfolio update of my InvestEngine stock and shares ISA. It's an exciting one for me personally, as this month I met a milestone of being 25% the way through my goal to reach a 100k ISA portfolio within the next 3 years. This was mainly thanks to the markets having a really good month, with the S&P 500 hitting record highs following good inflation data. So I'm excited to share with you this portfolio update, and it's definitely a welcome portfolio update, as last month we had a bad month for the market and a bad month for my portfolio. So this one should hopefully be better, with better news following the good market movements this month. If you're new to the channel, I'm Alex, a management consultant by day, and on this channel we like to talk about all things personal finance with particular focus on how to grow your money. If you'd like to follow my own personal finance journey with regular portfolio updates on my InvestEngine and Monzo portfolios, as well as a bunch of other personal finance related videos, then I'd greatly appreciate subscribe. But for this video, let's get into it, and let's start off as always by taking a look at how the markets have been performing over the last month, and specifically the US market, the UK market, and the European markets, as this will provide a reference point for my own portfolio and provide some guidance into why my portfolio has performed the way it has. We can see it's been a great month for the markets, with the US stock market measured by the S&P 500 up by 6.77%, the UK stock market measured by the FTSE 100 up by 6.64%, and the European stock market measured by the Stoxx 600 up by 4.74%. The key factor contributing to this positive performance was good inflation data over the last month. CPI inflation data in the US came in at 3.4% in April, down from 3.5% in March. Not only was this positive because inflation reduced, but the data was also importantly in line with economists' inflation expectations, ending a 4-month streak in which inflation outstripped expectations. This positive data had a clear impact on the S&P, as the day the data came out, the S&P 500 closed 1.2% higher. The reason for this impact is because inflation is providing a key determining factor for whether investors, and particularly big institutional investors, think the Federal Reserve will make interest rate cuts this year. And how this links to the stock market is that interest rate cuts lower borrowing costs for companies, making it easier for them to use loans to fund their growth. And this of course aids the overall stock market, as if companies grow, if their revenues grow, then their share price is likely to grow. And if every company's share price grows in the S&P 500, the overall index will of course also increase. So this is the reason why when inflation comes down and interest rate cuts look more likely, huge flows of money go into the stock market, pushing the S&P 500 to record highs. It's worth saying that there is still work to do to get inflation back down to the 2% target level for the Federal Reserve, but the fact that this month inflation fell in line with expectations is a big step in the right direction. And hopefully after a couple more months of moving in the right direction, the Fed will consider rate cuts. A key trend that is making this look more likely is that recent US labour market data showed a slowdown in job creation. Employers in the US added 175,000 positions in April, which was the fewest job gains since October last year, and weaker than most analysts expected. This is important for inflation, as it reduces the prospect of wage spiral inflation, which is essentially when workers continually get increased wages and then use those increased wages to demand more goods and services, pushing up the prices of those goods and services and causing inflation. So a slowdown in the labour market reduces this prospect and provides a more promising picture for inflation to reduce further in the US. Elsewhere in the world, inflation is also getting closer to the 2% targets of central banks. For example, in the UK, the last recorded inflation rate at the time of recording was 3.2% from March. And in the Eurozone, the last recorded inflation rate was 2.4% in April. The positive inflation rates in these areas and positive inflation trends have of course had a positive impact on their respective stock markets, as we can see here. The UK FTSE 100 was up by 6.64% over the last month, and the Stoxx 600 for the Eurozone was up by 4.74% over the last month. So overall, it's been a great month for the key stock markets around the world, with positive inflation data and positive labour market data spearheading this good performance. Now we know this, we can move on to my own InvestEngine portfolio and take a look at how it's performed over the last month. So let's bring up InvestEngine's app. Before digging into the performance, it's worth saying that InvestEngine still have a great offer for new customers, whereby if you're a new customer and deposit and invest £100, you can get a bonus worth up to £50. If you'd like to access the offer, I have a link in the description. But in terms of my own portfolio's performance, we can see over the last month, my portfolio is up by £838.58 in pound terms and 3.06% in percentage terms. And my balance now stands at £25,190.36. So I'm over the 25% mark in terms of a milestone towards the 100k target I set myself to reach within the next 3 years. And to me personally, this is a big milestone, so I'm super happy about that. In terms of specific performance over the last month, let's use this graph as always to go through how the portfolio evolved over the month. We can see at the end of April, the portfolio was quite volatile. April was overall a negative month for my portfolio. Then my usual deposit came in, which is £1,500 every month. Then at the start of May, the portfolio slowly picked up, and particularly around the 6th and 7th of May, there was a jump. Then again, it slowly crept up towards around the 14th, 15th and 16th of May, which was around the dates the inflation data came out in the US. And this of course pushed the portfolio up even further. As we spoke about earlier, this had a real positive impact on particularly the S&P 500. And there's no surprise it had a positive impact on my own portfolio because I have heavy exposure towards the US, particularly through my world index fund. And then after that inflation data came in, the portfolio stabilised around its current mark of £25,190. So overall, a good month for the portfolio. In terms of how the portfolio has performed since I started investing in it, we can switch to the max tab here, and we can see that my portfolio is up overall by £2,258 in pound terms and 16.44% in percentage terms. And this doesn't include the dividends I've received over that period, which equate to just over £105, and were reinvested straight into the portfolio thanks to InvestEngine's Auto Invest feature. I actually need to turn this back on, as I can see it's off right now. So let's do that. Let's do that now. Let's turn on Auto Invest and let's click here and let's click turn on. So this will mean whenever I have dividends or just cash added to this portfolio, it will automatically be reinvested straight into my portfolio at my chosen weights. Going back to this month's portfolio performance, overall I'm pleased with how the portfolio has performed over the last month. I started the month with a portfolio value of £22,851 and I'll finish the month at the time of recording with a portfolio value of £25,190. Now we know the overall performance, let's take a look at how the individual ETFs have performed over the last month. And let's start off as always with the largest ETF in my portfolio, the HSBC MSCI World, which makes up 70% of my portfolio. This fund is up by £570 in pound terms and 2.95% in percentage terms. And like we've discussed many times in previous portfolio updates, there's no surprise with how this ETF performs each month, as it tends to follow the US, how the US stock market performs, because it's mainly exposed to US equities. If we click on it and go down, we can see in the ETF breakdown that nearly 70% of this fund is exposed to North America. So of course, if the S&P 500 has a good month, this will likely follow, as it's mainly made up of American companies. So no surprise with the performance of this fund. The next fund here is the iShares MSCI Emerging Markets, and this had a really good month. It's up by 6.71% in percentage terms and £160.47 in pound terms. If we go down, the next fund is the iShares MSCI World Small Cap, and this was up by 3.91% in percentage terms and £95.79 in pound terms. And there's no surprise here again that this had a good month, as small caps particularly are very sensitive to interest rate movements and news about interest rates. So given we've had positive data around inflation, which has a positive impact on potential interest rate movements, there's no surprise that this small cap fund has reacted positively and done well over the past month. The next fund hasn't done well, and that's the iShares Physical Gold Fund. This is down in percentage terms by 0.95%, and in pound terms it's down by £26.87. This has been on a real good run, this gold fund, over the past 6 months, and of course that was going to end at some point, and this month it's only a marginal decrease, 0.95%. Over the last 6 months, this fund is still up by 19.9%, so it's done extremely well over the last 6 months. The last fund in my portfolio is WisdomTree's Cloud Computing, and this was up over the last month by 1.33% in percentage terms and £38.45 in pound terms. And this performance was welcome, as over the last few months, this fund has been extremely volatile. If we look over the last 6 months, we can see it's been up and down a lot. So hopefully the trend we've seen this month continues, as this is my passion sector and something I'd like to see really grow over the next 5 to 10 years. And I have full faith that this fund and the companies within it will see high growth. And overall, in terms of the individual ETFs, 4 out of the 5 saw good performance over the last month, and the one which didn't only had marginal negative performance, and over the last 6 months that's done extremely well anyway. So I'm pleased with the performance this month. I'm pleased that I met my milestone, and hopefully we see a continued good stock market run for the rest of the year. If you'd like to find out why I haven't invested in an S&P 500 Pacific fund in this portfolio and don't plan on investing on an S&P 500 fund again, then I have a video around here explaining the reasons why. But for this video, thanks for watching, and let me know how your InvestEngine accounts, how your portfolios have performed over the last month. Thanks.